Let's talk a little bit about the markets today because it was an interesting afternoon. This morning, the markets were actually selling off pretty good. So we actually woke up this morning. Markets opened down about 12 points. We were down about 16, 18 points at one point this morning. The market kind of started recovering a little bit later this afternoon, heading into an announcement by the Federal Reserve. Federal Reserve comes out, they announced that they're going to raise the overnight depository rate for banks. Now, the reason they do this is to encourage banks to keep their money in bank reserves for the time being rather than moving it out to other activities. By paying them more, they're hoping it stays there. What this will do is help suppress what they call the velocity of money. It's how fast money moves through the system, which leads to inflation. There's a correlation between monetary velocity and inflation. So the goal here is to keep inflation somewhat under pressure by suppressing monetary velocity, as well as at the same time hiking interest rates to both slow economic growth a bit and tail off some of the inflationary pressures. So the question now becomes is exactly what the Fed's going to do next. Now, the interesting thing here is that by lifting the interest rate on overnight reserves, it actually kind of provides a little bit of the same effect as actually hiking rates. It suggests that the Fed may be closer than not to not hiking rates over the course of the next couple of months, and that easier monetary, that more dovish monetary policy gave the markets a lift. Now, the good thing here is that we have been trading along this 100-day moving average for the last really 8, 9, 10 days. We had increased exposure to portfolios when we initially broke out here. And since that time, things have been doing okay. Markets have been moving back and forth. But we haven't done anything, and we remain trapped in this consolidation sideways pattern after this move up from these recent lows right here. We remain kind of stuck here. Now, what we need to see happen here is for the markets to move out above this consolidation range, and if they do that, we can add some further exposure on a breakout at that point. However, I caution you to be a little bit careful here because going forward, things get a little bit more difficult vision-wise about how much of this market rally is actually left in the markets. This consolidation pattern that we've been in for the last couple of months, it could be just a consolidation pattern leading to another rally in the markets. It can also be part of a broader topping process, and you just don't know what that is until you actually get to the end of this process, whatever it is. But this action here as of late is actually very encouraging, so it's going to be interesting to watch to see what happens here over the course of the next few days, and where we close on Friday is going to be the most important thing. If we can close above this previous high from last week on Friday, that's going to give us the ability to potentially add some exposure going into next week. We'll, of course, update all this analysis in our weekend newsletter as we do every weekend. So make sure you're registered at the website. Simply go by realinvestmentadvice.com and click on the subscribe button, enter your email address, and we'll email you both our newsletter and our Technically Speaking post, which updates our analysis on Tuesday after the market opens up on Monday. So it kind of keeps you in process with what we're doing with our portfolios, but also helps you keep a little bit better vision on what's kind of happening in the market so you know what to do with your money as well. Let's take a look at a couple of other interesting markets that are actually going on as well. Bonds had a really, really good day today. Really over this kind of relief from this trade negotiation thing. We're starting to see some money kind of flow back into bonds. Had a nice turn up here off this recent bottom, and this bottom actually goes back to earlier last year. But we're coming off that bottom again. Nice little turn up here. Look, the trend of interest rates is still very negative at this point, so we want to be careful with it, but understand that we're probably at the point in interest rates that we're at a good buying opportunity for actually fixed income. And we've actually been nibbling on some new bonds down in this range because typically when you're down in this area and being this oversold on bond prices, generally it tends to be a good kind of rotation trade. Outside of that, also take a look here at what's happening with real estate. It's another interest rate sensitive situation. We've seen an increase here in real estate shares as well. Nice little uptrend here building, and if we can get a breakout above this resistance here at this moving average, will probably be a good buying opportunity to add some real estate to portfolios. And so we're looking at that also as well at this point. Outside of that, one of the areas that we're not excited about continues to be international stocks. Absolutely nothing really kind of going on here in terms of international. International continues to languish. There's lots of talk about valuations being cheaper internationally. There's really no activity or no reason to be buying international stocks right now. They're simply just not trading well. And we're making better money and better progress domestically, particularly in mid-cap shares and small-cap shares. Small caps in particular have been doing very well here. We're actually looking for a bit of a pullback here on on small-cap stocks. If we get a bit of a pullback here, which we kind of started here over the last few days, we might actually have a decent opportunity to add some more small-cap to basically portfolios. Outside of that, one of the other areas that people ask me about all the time is really kind of talking about energy stocks. Energy stocks have had a great run here, extremely extended on energy stocks. Look to take some profits up in here, and if we get a pullback on energy stocks to basically a little bit of support, we need to kind of work off some of this really overbought condition. So even a pullback into the 74, 75 range on XLE will give you a decent entry opportunity. But right now, a lot of the energy stocks are really, really, really extended. So take a little bit of profit. Doesn't mean sell all the position, but take a little bit of profits. Store some cash here. This is a good rebalancing opportunity. Take something that's really, really overbought and extended. Take a little bit of that money, come out of there, and maybe look at adding some really kind of beaten down sectors as a rotational trade and a safety trade.